Why should one even bootstrap?
There's the selfish reason and there's the true reason. And then you can hold the maximum equity if you bootstrap.
I've heard an investor saying equity initial stage में इसके ऊपर focus मत करो, पहले business build करो.
Yeah.
And another investor saying you need to secure an equity.
Yes.
So what is your take on it?
Like everything in life, there is no right answer. Given the time and place, there is a different answer that is true in the moment.
Yeah. Have you ever invested in a solo founder?
Yes, I could definitely think of one or two had a solo founder.
So I would like to go to the next question.
Yes, please.
What is the procedure
Yes.
to get a fund from VC?
Yeah.
Yeah. I mean, step-by-step procedure, is it?
From a venture capital?
Yes.
Okay. So you want to start with a concept that you are passionate about. You want to build a prototype that people really enjoy using. Then you want to connect a business model that people find is worth it. So if you're building, say, a SaaS software, say Zoho, and where other software already existed, and then Sridhar Vembu took out that software and put a really nice price tag and a pretty good UI and competed with your Googles and whoever else. And people said, yes, this is working for me. It doesn't have all the features that Google does, but the price is very attractive for me. So the combination of features and price is working for me. So that is reaching product market fit. Now at that point, normally a seed investor is ready, but maybe not a VC investor, right? Seed is normally crores of rupees, not millions usually, right? Not millions of dollars. And now with those crores of rupees, you normally go get your first 100 or a first few thousand customers, right? If you get few hundred companies as your SaaS startups customers, then a VC says this is working, right? Especially when some of them have, SaaS is monthly payment. If they've gone through 5-6 months of repeat payments, that means they are now stuck. Like they're enjoying your product, they're using it, and now you've managed to convince few hundred people. Then they say, okay, are there thousands or hundreds of thousands or millions of such customers? And if they say yes, and you've only got a few hundred and there's a million possible customers, I'm in for this ride.
Okay.
I will give you a check to take a proven product which is used with a few hundred proven customers and with a proven business model now to expand to hundreds of thousands of customers. I will take that risk. I will pay for that chance with you. That's when a VC normally wants to come in. They want to take the scale risk, mostly in India. Right? They don't want to take the product market fit risk. But in the West, they also take some product market fit risk. But in India, they mostly take scale risk. Right? So that's when a VC normally comes and they'll write anywhere from 1 million to double-digit million checks.
Okay.
These days, I think they're writing even triple million checks. But that's when a VC normally comes, and this is the step-by-step journey. Normally, in the journey from your product prototype all the way to product market fit, you want to start keeping the VCs in the loop. They want to track and follow your journey 1-2 years before they invest. And if you do this, it's very powerful. It's a trust building exercise. When a VC writes a check, it's not because they met you yesterday and today they're writing the check. They would like to know you for a few months. They get to know you as a person. They get to see your company actually growing. So when they see the startup growing, they see what type of person you are and they like both. That's the time when they're most likely to write a check. So another part of while you're building the startup journey, step by step, you also keep the investors up to date, not expecting a check soon, expecting a check 6, 12, 18 months later. That is a very important parallel journey that as a founder, you have to maintain this relationship journey right, with investors.
Yeah, so I could relate with this very much.
Yeah.
Because even when I was in the early stages, in my first startup, I used to do the same mistake. I have the startup today, I need fund tomorrow.
Yeah.
And I even get so many messages ki I'm doing this amazing thing, amazing product. Just keeping the product aside, the startup is just 1 month old, and so they seek for funds.
Yes.
And again, a curious question: ki, how much fund is so much fund? How much fund do I need? How do I decide it?
So this goes back to something we very briefly touched before.
Yeah.
Normally about 18 to 24 months. So let's take an example. Say I am running Build 3 only, startup accelerator. Let's treat it as a startup. Okay. I want to create Today I do some early stage accelerator programs, but I want to get into deep tech startup funding, right? So then I need to hire a deep tech expert. I want to create a lab which is going to have certain types of computers and certain types of machines, etc. So that's going to cost me something. So what is the team I need? What is the machinery and the equipment I need? Do I need to rent a certain location? I will add all these costs, right? And then I will add a buffer. Usually I say 20%. You add that buffer. What is this total that you need for the next 18, 24 months? All the things you can think you need to do to expand your business. You add all those things and all the costs associated. And say you come to 5 crores, right? With the 20% buffer, that is 6 crores. Okay. So I need 6 crores of money. And then I go to my investor saying, I want 6 crores. He'll say, why do you need? He or she will say, why do you need? I will say, hey, I want to expand into deep tech. I'm going to open up a new location. This is my rent. This is my equipment. This is my team. And this is it's everything I need. So this is my journey in the next 12 or 18 months. This is what I need the money for.
Yeah.
And then it is how you can tell a good story. Everything is a story, a narrative. What is my plan? Why will that plan work? Why does it cost as much as it does? What is the benefit or the result it will create? And how will that finally return a benefit to the investor? Investor is finally an investor, which means providing money to receive more money. So if you're going to ask them for 6 crores, you have to show them how you will give them at least 30 crores or 60 crores, 5x or 10x. That's what investor wants. So what is your story? How will you achieve it? How will it create benefit for the investor? They need to hear that.
How to decide how much equity to dilute for an early stage startup founder while raising funds?
Yeah. This is tricky. This is not science. This is art.
Yeah.
Generally, any investor at any stage, from your friends and family to your seed to your VC, want about 20 to 30% of your company at that stage. At whichever stage they're coming in for their money, they will take 20 to 30. And so if somebody is coming for 30 lakhs, your company is probably going to be 1 crore, max 2 crores. Okay. If somebody is coming for 1 million, your company is going to be 3 million, maybe 4 million.
Yeah.
Okay. So at every stage, that's typically what an investor wants. That is one rule of thumb. The other rule of thumb is if you can find a very similar other company to yours, which maybe 2-3 years before or a few months before gained funding, and you can see their valuation, then you can say this is the valuation that this other company got. They are 80% like us, 20% we are different like this.
Okay.
So if they got 5 crore,
Yeah.
we are 20% better or 20% slower. So you can either be a 6 crore valuation or you can be a 4 crore valuation. But 5 crore is the basis.
Yeah.
And because I'm 20% slower, I should get 4 crore.
Yeah.
Well, because I'm 20% faster, I should get 6 crore. Then you can make a comparative valuation argument. And that also frequently works.
Yeah.
So this is the one other methodology that works, but it's very hard to find something similar enough. Right? What we think is similar, the investor doesn't think similar, and vice versa. Sometimes investors say this is similar, and they're trying to take us to a lower valuation. So it's a little bit of a dance.
Yeah.
The one other thing to keep in mind is at every stage, you're not going to get the best valuation. But through the journey where you will do 3, 4, 5, 6, 10 investments, the journey should be pretty fair. You should feel like by the end of it, you have enough where it feels valuable. Like today at 91 Springboard, I have just under 10%. I feel that is fair. I have enough of the company, that's okay. Right?
Yeah.
So it's a journey. Many investment rounds will happen. And overall, it should feel like it's okay. Instead of each event being maximum, then something tends to go wrong, I found.
Yeah. So person should be satisfied.
That's your internal tuning.
Yeah.
And as a founder, sometimes we get greedy. Can we be a little bit more fair, honest, content? That would be amazing. Yes. Beautifully said. Yes.
Nice. So I'm very much curious to ask this question. This question is coming from the online media. So when you look at Shark Tank or when you look at any other presentation programs, and even some memes in Instagram and all. So the common question is why do investors only want to fund technology startups, or is it also true?
See, the truth comes from, let me ask you a question. In a technology startup, especially software technology, when say Zoho has to find one new customer and give them one new login, what do you think it costs Zoho to create that extra login, that one extra user to give them that software? What does it cost?
I think just the CAC, I mean, marketing cost.
Yeah, and if it's a referral customer, even that is not.
Yeah.
Yeah. So the operating cost, the technology cost is practically negligible.
Yeah.
Right. So with technology businesses, what happens is that they are very quickly scalable in that tomorrow if 10 people wanted or tomorrow if 1000 people wanted, how to create 1000 new logins this
Yeah.
fast, how to create 1000 new software instances for that organization also like this, right? With cloud and all of this, it's very quick. So scaling becomes like a hockey stick. Exponential growth is possible.
Yeah.
Right? So that's why people love technology businesses, because they can have this growth, which means very fast revenue growth, very high margin. That's why investors like technology businesses, because they can return that 5x, 10x of investment in a short period of time by giving very high return.
Yeah.
That's why. What is the other type of business? Can you think?
Other type of businesses?
Which a VC will not love?
Okay. Operationally heavy.
Yeah, think of one.
Uh,
Movie theater,
Yeah.
hospital, barber shop,
Yeah.
right? To create a new barber shop, what? You have to hire 3 new barbers, you have to buy all this new equipment, you have to rent a new location, you have to buy the chairs, and you have to start the marketing in that location again.
Yeah.
So from going from one barber shop that could handle 100 customers a month to going to second barber shop that can also handle 100, together 200, how much time and energy did it take to double your revenues? It took 3, 4, 5, 6 months.
Yeah.
Right? It took lots of new money of capital, etc.
True.
So how can you grow that business? Much more slowly.
Yeah.
Right? And the profitability is not increasing with every unit. Profitability is same.
Yeah.
If it's 30% margin or EBITDA here, it will still be 30% EBITDA here. It won't suddenly become 50, 60, 70, 80, 90, right?
Yeah.
So growing is slow and profitability is same. With technology business, growing is fast and profitability increases.
Uh, so, does investors look at the impact that has been created?
Some, not all.
Okay.
Some investors only care. I'm giving you money. I want 2x, 3x, 5x, 10x, 100x.
Okay.
Some only care that.
Okay.
Some care that I want these founders to do it with heart, with care, or what is called impact. And I care a lot about that.
Yeah.
So I am that sort of a partner where I go with founders where, hey, what you building, is it going to change the world? Is it going to make the world a better place? Awesome. I'm behind you guys. Now, can you do this in a financially profitable way? As we say, balance purpose and profit. Can you do that? Those are the startups I get really excited about.
Yeah.
But too many startups, I think, are still, I would say, a little bit selfish. They're doing it for themselves, to become rich themselves, to become famous themselves. And I can't fault them. I've been that as a younger person. But that today, to me, is not a fulfilling way to live life, especially seeing the situation the world is. Too many selfish people have lived their lives, and it's showing an impact on the world.
Yeah.
So people that care for more than just themselves, I think, make for better entrepreneurs, more caring human beings. They make for superior entrepreneurs, and I would like to work with them. So that is my selfish dream of working with such people.
Yeah, I think that's why the name is Build3 Impact, actually. Impact.
Yes, you got it. Yes.
Yeah.
Yes.
So, I completely understand that technology can really scale things fast.
Yes.
But just think of a person who's really passionate and is very much capable of building a business, and but is operationally heavy business.
Yeah.
So, how do he or she find investors
Yeah.
for their business?
So typically not VC,
Mm-hmm.
but you can find friends and family.
Okay.
You can find informal debt.
Okay.
Equity is one way, but you can also find debt.
Yeah.
There's informal debt which you take from friends and family, and after some time, if you can show 3 years of profitability as a small company, you can even open up some commercial debt.
Mm-hmm.
So these are ways and sources you can go. Up to angel investors also come in on the equity side for such businesses, who then cannot take VC money because VCs will not see it as an exponential growth business, they'll see it as a linear growth business. So then the sources will become either slowly build it out ourselves with our own profits, or take some debt money formally or informally, or take some friends and family money. But you will not get VC money for such businesses,
Yeah.
right? Typically.
What do investors generally expect? I think bits and parts, everything is covered in this entire thing, but I would like a detailed conversation
Okay,
on this.
okay. So different investors expect different things,
Yeah.
right? Your friends and family are really doing it as a way to support you, and hopefully they'll get their money back and some more.
Yeah.
Your friends and family are doing it really as a support,
Hmm.
right? They're expecting financial, but second. Angel investors are expecting money back, but they are normally putting in crores and not millions. But they are expecting, 5x, 10x, they are expecting back, and they will wait about 5 years for it. Okay.
Yeah.
VC investors are expecting they're going to put in millions and they will expect 5x to 10x on millions. So suddenly growing that fast in a 5 year time frame is hard. So for those type of businesses, you have to have that exponential growth. So for many linear growth businesses, real estate based, commercial, retail, D2C businesses, where there's physical product, etc., you will get friends and family money, you will get some angel money, and then you can get some bank money, and that will be your trajectory.
Yeah.
And if you are in a deep technology or a hyper growth business, then you will be able to get friends and family money, angel money, and then some VC institutional money. This is the path that you can take. So there are slightly different paths depending on the nature of your business. And their expectation in the later stages always becomes 5x to 10x of the amount they're giving you in about 5 years.
Yeah.
That's their broad expectation from any formal investor.
Yeah.
Friends and family are a little bit different, where they love you, they want you to succeed, and your success is their happiness.
Yeah.
And if they get something back, 2 3x, 30-50% return.
Yeah. While generally presenting an idea, pitching to an investors, so we have a great reference of Shark Tank. कि presentation ऐसे होता है, right? So is it true presentation of pitching to an idea to an investor is so fast, or how details are involved in it, and is it easy or hard?
So different personalities are there, right?
Yeah.
Even in your startup, right? You and Zishan are different personalities.
Yeah.
Right? I can imagine presenting might be more easier for him. I can see creating the presentation is more easy for you. So we all have different skills and strengths.
Yeah.
And some people can put on an amazing show and on the fly they can speak beautifully and convincingly, and some people have to practice and repeat and rehearse for weeks in advance before they can give a speech that looks like wow. Like even Steve Jobs, who gave some of the best presentations in the world. There's a lot of theory, if you go read, that for a week before he would be practicing daily and he would speak in front of a mirror, he would speak on an empty stage to the room. So he has the habit and the practice. He would revise his slides again and again. Only 3 things will go on every slide. And he had the very famous last thing. Oh, and there's one more thing, right? So even he had to work really hard to come across as a natural presenter. Elon Musk, I've seen his presentations over the years. In the beginning, he was quite hesitant and would make some pauses, but with practice, he's become a beautiful speaker where he's revealing some great products that are changing the world, and he does it very naturally. So there's a journey. Anything with practice, you can get better at.
Yeah.
So in the beginning, when you don't have a practice, it's hard.
Yeah.
But as you get practice, it becomes easy.
Yeah,
You just have to decide if you want to make the effort.
Yeah.
Right? So the pitches on Shark Tank all happen in a very short amount of time, and some of these people do a lot of rehearsal in the back and they come. But it is true, you don't get a second chance to make a first impression. And very few people in this very busy world will give you a second or third chance to present to them. Right? So building a relationship and sharing with them information by information. Some people give you the opportunity, some don't. And some people only give you, hey, you have 5 minutes, pitch me your idea. And you take it or you miss it.
Yeah.
Life is going to throw both things your way.
Yeah.
And try to become good at both. But you won't be good at both in the beginning.
Yeah, I laugh because I just remembered a situation where there were over 200 people in front of us. Me and Zishan were very much not prepared,
Yes.
but we were thinking that the projector will be on and we'll be looking at the presentation and we'll be just presenting.
Yes.
But suddenly, I don't know what to say, but only for our presentation, pitch, the presentation, the thing got,
Projector.
yeah, the projector was not working.
Yeah.
And we were completely blank. So there were 200 people in front of us and investors were evaluating us. We were saying, so this is like this is the problem is to help day job operators. We were saying the same thing again and again. And the best part, as youngsters, we would there were girls laughing, seeing on us.
Yeah.
So I just remembered it.
Yeah. And it made you feel a little bit uncomfortable.
Yeah.
Yeah. But now you reflect on it. You
Yeah.
thought about it.
Yes.
And since then, some changes you have brought in how you present and how you prepare and
Yeah.
all of this, right?
Yeah.
So it made you better.
Definitely.
Practice makes you perfect.
Yeah. True. Okay, so this is a very, very specific question. I don't know is it true or not. So why do investors believe it's important to build? Sorry, it's impossible to build to B2B and B2C both simultaneously, although it is reliant on technology.
See, a business is not just your product.
Yeah.
Yeah, you can sell the same product to different types of clients. But there is the act of marketing, there's the act of selling, there's an act of figuring out the business model,
Yeah.
and there's the act of servicing. All of these are different for the different customer, even though the product might be the same,
Yeah.
but all of these other activities are different. And these are maybe 80% of your company.
Yeah.
So 80% of your company has two personalities.
Yeah.
It looks like a multiple personality disorder company. When you're a small young company,
Yeah.
you can't have multiple personalities.
Yeah.
You can barely even hold one personality together.
Yeah.
Right? So that is why I think they would say this. It is not uncommon for a big company. Right? Once you reach a certain stage, then you can have separate marketing, separate sales, separate operations. You can have all of these different departments to do the same product or a slightly tweaked product for two different, very possible, right?
Yeah.
But in the early days, it's very, very hard because your resources are less. You've got few people, you've got few money, you've got few technology, you've got everything is less. And you try to use it for many things, you use less things for many things, then you're stretching yourself thin and something will break and you'll be in trouble. And whatever was going to work, even that doesn't work.
Yeah. So I mean, focus is more important.
Just to start.
Yeah. So I mean, I'm asking this question to an investor first time. I feel like
Right.
you're an investor. Generally, whoever comes to me and say that I connect me with an investor, and I generally say that investors only invest if they think that you can run this business. I mean, without depending on the investor's money.
Yes.
So, as an investor,
Yeah.
what do you feel? What is your take on this?
See, if a business can be run with little or no money, I would like to see the founder doing that.
Yeah.
To me, taking the money away is showing that this founder is taking the easy route and probably a failed route. The hard work happens when the founder solves the hard problems creatively. It's a product problem, it's a sales problem, it's a marketing problem, or an operational problem. They solve the problem with creativity and hard work. When they solve the problem with money, I think that's a poor solution. That is my belief.
Okay.
So, founder that demonstrates that they can use their mind and their energy well to solve the problem, that holds well for me. That said, can all problems be solved without money? No. Could Elon Musk launch rockets into space with no money? No.
No.
But could Sridhar Vembu create some version of Zoho with very little money if he is a technology person himself? Yes. Right? Some businesses are possible with the founders' abilities themselves, but some businesses are not even in the realm of possibility.
Yeah.
To buy a rocket booster and God knows what else, that's millions or tens of millions of dollars, right? Like how? Not possible.
True.
So some businesses are not possible and we have to be realistic. But what we're truly looking for is the founder giving up on the hard journey of solving problems with creativity and with grit and resilience and stubbornness. That is the real thing I'm looking for in finding a successful future founder.
Yeah.
Founder's personality.
Amazing. So, doing is everything is validated by an investor.
Yes.
Yeah. So, finally, what would you advise the viewers, the community people?
Yeah, I will summarize a few things I've said. Pick ideas you're in love with, because at some point you will get tired. If you are not in love with the idea, you will give it up at this point. Pick ideas you have good skill in solving. It's a problem you have, you know how to solve, you've been passionate about solving, and you are solving for yourself first and foremost, and for others second. Then you will end up doing a good job because it is a problem you have and skills you possess to solve. Right? And finally, don't do it for the money. The money will be the after effect, not the first outcome, but the second outcome. The first outcome is making something beautiful that solves your problem and delights hundreds, thousands, millions of other people, and take joy and satisfaction in that journey. So go on this journey. It will be minimum 10-year journey. Go with it with a lot of joy, a lot of energy, a lot of curiosity, a lot of passion, and you will be rewarded in many, many ways. Many stories, many friendships, satisfaction of customers smiling, giving you hugs, writing good reviews, and also some money. But it's going to be a journey that you cannot satisfy yourself doing just for money. So do it for the right reasons, do it for the long run, do it with love, do it with grace.
Yeah. Uh, Sorry, I thought that I am done with the questions, but
Yeah.
one question really just struck me.
Okay, try.
I heard this when I was a student.
Yes.
Okay, student founders are not able to raise fund, and even investors doesn't much show interest in student
Yeah.
founders. Is it
Yeah.
true?
We'll go deeper, right?
Yeah,
What does an investor want?
yeah, returns mostly.
What is the best chance of them getting returns?
Working with experienced people, obviously.
So people who've learned from mistakes.
Yeah.
So that is the only reason why I think there could be a preference.
Mm-hmm.
Have student founders solved real problems in the past?
We do not have much data.
Hey, Facebook.
Yeah.
College student
Yeah.
solved Facebook.
Yeah.
Almost student founders Apple.
Yeah.
Right? Almost student founder Microsoft.
Yeah.
Right? So no, student founders have solved real problems.
Yeah.
But it has to be a problem they are familiar with.
Mm.
The founder of Zoom, I think, was in his 50s when he founded Zoom, because he was solving a very specific problem. Was video conferencing a problem? It was somewhat a solved problem. He went in very specifically. He said, I want my grandmother to set up a video conference in 1 minute. Right now, to do a video conference, a tech guy would come into the room, spend 5-10 minutes configuring everything, and then 5-10 people could have a conference.
Yeah.
It was possible, but it wasn't easy. He said, I'm going to make it easy.
Yeah.
Now, to understand a problem at that level, he needs to have seen that industry for many years, and he was at Cisco and saw this problem very closely to have a knowledge of the problem. Right? To solve that type of problem, you have to be 50. You have to have experience. You have to have all of that wisdom and experience, right? But as a younger person, you have other experience in other problem areas, right? You might have seen problems on YouTube, right? Like young people use a lot of YouTube. So they might have problem in the UX of YouTube and how it's showing videos, and maybe they can build a better YouTube. Maybe they have experience on how they are going to physical parks and how these parks are set up and what equipment is given there, and they might have an idea how to do a better park. Kids these days at a very young age have started going to therapy. Maybe some kids will have better idea to how to set up a therapy software or a therapy for young children, how that can be done better. So they have problem statements they are familiar with.
Yeah.
And they can solve those problem statements with good insight, right?
Yeah, true.
So I think a founder can solve a different aged founder can solve a different type of problem, but they must be clear about the problem statement and they must be familiar and passionate about it. But student founders can absolutely solve problems.
Amazing. I mean, I'm very much thankful to listen this because most student founders, I don't know. Okay, they do not understand what kind of problem should they solve.
Sure.
But you have really provided a great clarity now.
Thank you.
Yeah.
Happy to help.
Yeah. Thank you so much, Varun.
My pleasure.
It was a great time with you.
Like,
And I think the audience who are watching us also have got a great insights. And in case, Varun, if I get any more questions on investors, investments, and VCs, I'll come again and disturb you.
that is fine. I'm okay with that.
Yeah, thank you so much.
Cheers, guys.
Yeah.
Bye bye.